In this video, we are going to be analysing Tesla, ticker TSLA. Now they was on the open, moving up quite a bit. Now this was just on news on a Rivian partnership. They're going to start using their superchargers to charge their own cars. But obviously the overall market has been quite weak on the day, so I think Tesla's more just now following that trend. Now, one thing to note, make sure you're in our Discord. Again, it's free to join. We called out this Tesla play as we started to pull back nowhere near that level, and as you can see, played out near enough to the penny. Great bounce to VWAP, and again then we're out. So if you want to see those again, Discord in the description, free to join. Now though, to go over the key levels, what are we paying attention to on Tesla going forward? So right now we're basically stuck within the range or near the range of $250 to $262. Now what is this? This is our range of our second deviation. So usually I don't like to tend to trade, or at least swing trade, in this area. What I instead wait for is a break out of this range, and then we can look for that next trading opportunity. Ideally we break to the upside. And the reason I say that is because then our next target, if we can break 262, is going to be all the way at $285.40. Now, this is our third deviation on the 6 month. So if we can come into this level, it's very rare that stocks tend to trade at or above this level. And even if they do trade above it, it tends to be very short-lived. So if we start trading above this level, again, I'm looking at it short bias, whether that's shorting shares, buying calls, buying outright puts, or doing some sort of vertical spreads. But if we come to that level, looking at it short bias, with our first target going to be at that deviation below, which in this case is going to be around $262. So, you're looking at around a 20-point move to the downside. And again, we can have relatively tight stops on these. Or again, if we have defined risk, then we know what we're risking anyway. So that's going to be our first resistance. Ideally, that's where we go to. I would much prefer a move to the downside, the upside. But again, we will be talking about the downside because it's good to be prepared whichever way we go. And if we break that 285, we then have 312, which is really going to be the highest probability trade level. So if we can come into here, again, the same thing, short bias, first target at 285, then 262, and so on and so on. But this 312, this is our final deviation. This is our highest of the third deviation. So if we come into this level, very rare that we can hold above it. So again, if we come up to here, this is going to be my kind of highest short probability level that we can trade. So ideally a push to there, really high probability that we pull back. And so again, going to be one I take with quite big size. Now though, to talk about the downside probability, because again, it is kind of impossible to predict whether we will go up or down. So again, it's good to be prepared for whichever way we go. So if we do go to the downside, $217.50, this is our first deviation on the 6 month. So again, if we're short bias already, this is going to be one of our main targets. But if we are a trend trader, this is definitely a level we could potentially look to join that trend. Again, have a relatively tight stop. But if it holds, then again, we can have targets of around 250, 260, if we think it's going to continue to go up. Now, if we do break that, really, I wouldn't be paying attention to the levels below here, at least for the time being, because if we break below here, we're coming into fair value. Fair value is at $183. So basically just here. And yeah, basically once we come down to that level, this is where Tesla is at fair value. So if we were trading at short bias, that would be our final target. If we were trading at long bias, again, we're still not really going to look to buy that fair value unless we're looking at it from an investment standpoint. So really, it means these are our tradable levels. Once we come here, we're going to have to be a bit patient and either wait for a break back up to these levels, or our first deviation to the downside is all the way down at $150. So we would need to see a move down to that level to be able to start looking at tradable levels to the downside. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.